7.1, buying plant assets. We have one learning objective. You need to be able to journalize the purchase of plant assets. So terms first, we're going to talk about current assets. Current assets are cash or other assets that are expected to be exchanged for cash or consumed within a year. Assets that will be used for a number of years in the operation of a business are known as plant assets. So current assets are something that we're going to use up or turn into cash within a year. Plant assets are something that we're going to hold on to for longer than a year. It does say plant assets are sometimes referred to as fixed assets or long-term assets. Going concern concept and depreciation. Financial statements are prepared with the expectation that a business will remain in operation indefinitely. So we're just stating that when we're creating these financial statements, we're not looking at a business ever closing. We're looking at it staying open. The going concern concept enables a business to record the cost of plant assets on the balance sheet. The cost of plant assets is recognized over many years through the recording of depreciation expense. So what costs are included in plant assets? All the costs that are necessary to get the plant asset ready for its intended use are included in the cost of a plant asset. So it does give us an example. Land could include surveying and retailer fees. So sometimes you might need a surveyor to come out, or when you're buying the land, you also have to pay realtor fees. That would also be included in the cost of your land. Equipment could include freight, and installation. So the shipping of that equipment and then maybe the installing of that equipment would also be included in the cost. And then building could include costs like compliance with fire codes and accessibility laws. So maybe we bought a building, but we need to change some things to make it up to code for fire codes, or maybe there are some things that we need to make it handicapped accessible. That would also be included in the cost of the building. So now we're going to look at buying a plant asset for cash. This should be pretty easy for us. March 14th, it says that we paid cash to Metal Fabricators for a storage system, $16,850, check number 416. So here we see that we have a debit to our warehouse equipment for that amount, and then we have a credit to cash. We also have another transaction on March 16th. We paid cash to Preston Construction to assemble the storage system, $2,800, check number 417. So notice here's where we bought the storage system. Here's where we paid to assemble the storage system. So they're two separate transactions. They're both going to go to our warehouse equipment. Also notice it tells us who we paid cash to. We don't care who we paid cash to when we're actually journalizing it. It just goes simply in as warehouse equipment. So we have our debit to our warehouse equipment and our credit to cash. Buying a plant asset on account. So on March 6th, we bought on account new monitors for 3 office computers from Tech Systems, $690, memorandum number 23. So this case, we're not paying cash. We're buying this on account, so we're going to owe them money. We're going to debit our office equipment, and then we're going to credit accounts payable, specifically Tech Systems, for $690. Okay, so what they're talking about here is if it was that we are purchasing merchandise, then it would go into our purchases journal. We're not buying merchandise, we're buying equipment, so therefore it's going to go into our general journal. And we should know that. Okay, allocating the cost of plant assets. So on March 12th, it says we purchased a distribution center from Nextra Industries, signing a 10-year note, memorandum number 26. So they're showing us a bunch of math here. So here what we're looking at is the appraised value of the land is $60,000. The building appraisal value is $240,000. So the total appraised value is $300,000. Now we're assigning a percentage of appraised value. So 20% is the assigned cost for land, 80% is the assigned cost for the building. So total here is $280,000. So to figure that out, now they just broke it down how we figured that out. 60,000 divided by 300. So that's how we got that 20%. And then we took 20% times 280 to get that 56,000 for the land. So here they're just showing us this information again. And this is the same, recording the buying of group of assets, so allocating the costs assigned to the land, asset 1. So this is what we've already seen. Okay, so now we're going to calculate the cost assigned to the building. That would be asset 2. So in this case, we're going to take the estimated value of the building, which was 240,000, divided by the total estimated value, 300,000. That gives us an 80% total estimated value. Okay, then we're going to take the purchase price. So we bought it for 280,000, divided by that 80%. So now we're going to give the cost assigned to the building 224,000. Okay, so now we're going to record that. So we have a group of assets that we're recording because it was one purchase, but we're buying 2 different assets. So on March 12th, we purchased a distribution center from Textra Industries, signing a 10-year note. So in that distribution center, we actually, like I said, we bought 2 assets because we bought the land and we bought the building. So the land we figured out to be $56,000 and the building we figured out to be $224,000. Those added together is what we paid in total, which will be $280,000. So that's going to be our credit to notes payable. Okay, international accounting standards. It says on June 7th, Bethune Company pays cash for a $30,000 delivery truck, check number 523. It does say IFRS recognize that components of a single plant asset may be used by a business for different periods of time. So here we're looking at different parts of our truck. We have frame, transmission, and tires, and we're giving different values to those. So this is the same way that we figured out just that past slide, how we figured out the 2 different plant assets in that group. We do the same thing to figure out our assigned costs. Okay, so all of these put together is that 30,000 that we paid. An accounting form on which a business records information about each plant asset is called a plant asset record sheet. Most plant asset records contain similar information. It might look a little bit different, but we'll probably have this information. So here they show that we're going to have 3 different sections. Section 1 is going to be prepared when a plant asset is bought. Section 2 provides space for recording the disposition of the plant asset. So when the asset is disposed of, that's when we fill in that information. And then section 3 is going to provide space for recording annual depreciation expense and the changing book value of the asset each year it is used. And we filled out a plant asset record sheet in accounting 1. So here's an example of a plant asset record sheet. So here's our part, our section 1. This is recorded when we buy the plant asset. Section 2 is going to be recorded when we dispose of the plant asset. And then the third one, this is where we can record our depreciation. Land and anything that's attached to the land is called real property, or it's sometimes referred to as real estate. Personal property is all property that's not classified as real property. The value of an asset determined by tax authorities for the purpose of calculating taxes is called the assessed value. And then the tax rate that's used to calculate property taxes is called mileage or millage rate. Sorry, not mileage, millage rate. All right, number 1, what costs are included in the cost of a plant asset? Any cost that's used or any cost that's necessary to get the plant asset ready for its intended use are included in the cost of the plant asset. So that might be shipping, installation, getting things up to code. Number 2, how is the cost assigned to plant assets purchased as a group? The cost is allocated to individual plant assets based on their appraised values. Number 3, how is the purchase of plant assets accounted for using IFRS? This is when components of a plant asset that has different useful lives are assigned a cost and recorded in different plant asset accounts. So this is where we looked at like the delivery truck, and it has useful life is going to be different for its tires, and it's for its transmission and for the frame of the truck. Number 4, what are the 3 sections of a plant asset record? First is going to be general information that we complete when the asset is purchased. The second section is the disposal section, completed when the asset is discarded, sold, or traded. And then the third section is used to record annual depreciation expense. And then the last question, number 5, how is the amount of property tax determined? So there's going to be an assessed value of the property. That is then multiplied by the millage rate of the governmental unit to figure out the property tax. That was the end of 7.1. You can now open the 7.1 work together video and your 7.1 work together on Applia.